Hello, good morning. It's Tuesday the 28th. I'm FX Plu and this is the market brief. So we saw further strike action yesterday. This time it was the turn of the Criminal Barristers to walk out. The great wigged walkout. But this goes to show how wrong the Bank of England has got it and how the UK is at risk of getting trapped in a vicious circle of rising inflation being chased by rising wages. Once this becomes embedded, it's almost impossible to turn around. This morning I heard a headline suggesting that the doctors may be up next to have their moment in the strike action spotlight. Everyone's at it, trying to get ahead of the raging inflation. So the MPC need to get their act together and address rising inflation, and pretty fast. Perhaps even at the expense of a recession. Inflation needs to be seen as coming down pretty quickly if further industrial action is to be avoided. However, even when inflation does show signs of topping out, prices are still so much higher than they were a year ago, employees will still feel the pinch for a wee while longer, that's for sure. Q1 GDP data will be released later this week. That's expected to show a meagre 0.8% growth between January and March this year. We have to wait a little longer for any Bank of England reaction this time around. That's because they will not hold a meeting in July. It seems that even when you're falling short of the mark and letting your country down, summer holidays are still set in stone. Yesterday, sterling saw some selling pressure. We fell to a low of about 122.35 against the dollar. We open around 116 against the euro. Over in the US, that man in the street seems to be getting on with things pretty well. There are shortages of several big ticket items, of course affected by the supply chain issues, and higher prices are unavoidable, especially with gasoline. However, there's no widespread interest in inflation really, with how high that could go. The recession risk or a stagnating economy is more left to the money men on Wall Street to worry about. And there are mixed opinions. Market opinions seem to vary between those who see a recession as pretty much certain and others who expect the Fed price action to get a grip on demand and therefore control the rising prices in the short term. Tomorrow we have personal consumption expenditure data due. That is the Fed's favoured inflation data point, as it's based on a broader base than CPI. Spoiler alert, inflation is still going to be high enough to demand further Fed action though. In the market, the dollar index saw a degree of support at the lower levels, but it is struggling to break above previous highs. Yesterday we touched a low of 103.65 and euro dollar opens this morning at 105.75. Right, well that's it from me. Have a great day and do join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.